But let's focus on earnings now. Justdial has posted a steady set of numbers for the December quarter with revenue up 8% at 180 crores. To shed more light and decode these numbers, we've got the management with us. Joining us on the show is the CFO of the company, Ramkumar Krishnamachari. Good morning, Mr. Krishnamachari. Good to have you on the show. Can you tell us more about the numbers? Your profits seem to have seen some bit of buoyancy in this quarter, but the margins have shrunk.
This quarter has been a good quarter for us despite monetization. The monetization did have an impact to the extent of 7-8%, but actually that is offset by better realization from existing customers that I have. So demonetization has had a neutral effect as far as we are concerned, which is a big positive under the circumstance. As far as bottom line is concerned, we did focus on process weeding out inefficiencies in the process, and we have seen through technology technology-enabled processes, we have rationalized some manpower, and a good amount of all the reduction in manpower can be attributed to some of the process efficiencies that we have brought in, and which has reflected in the bottom line improvement. At the same time, I would say that bottom line is a function of, we have a lot of fixed costs. So where the overall expenses is growing 15-20%, but the sales is in single digit. So once the sales top line growth comes back to double digit, you will see further improvement in the bottom line margin, EBITDA margins.
So is it to be understood that the fourth quarter will be better and stronger than the one that has gone by?
You will see incremental, improvements happening as we move into subsequent quarters. Our focus is primarily get back the core search business to 20-25%. The potential is immense. We created this market as a local search market. We don't have near number two, and we believe that there is tremendous headroom across the board, main cities, remote cities, all over the place. We have tremendous potential to grow more than 20% on a yearly basis for the next 3 to 5 years. We have conviction in that. We just have to get our execution mechanism and order in place, which we are doing as I speak. So once we get there, our focus is on expanding the sales force across the board, main cities and remote cities. Make sure that at the same time, make sure we weed out bottom performers, bring in efficiencies in the system. So this two combination of increasing sales force will contribute to top line growth, and weeding out of bottom line performance and inefficiencies will contribute to bottom line. So both these will see helping us EBITDA margin improve as we move subsequently in FY18. So however, we are going to be spending on advertising starting February, and our ad campaign is almost ready. A final editing is what is left, which is what we are doing. So once we launch in February, you will see us spending on ad. That is going to dent the margin, but a lot of it will be a one-time affair as far as we are concerned, one-time spend. So you will subsequently, as the sales growth comes to about 20% plus, you will see the margin going back to 25% plus.
Can you speak to us a little more in detail about Search Plus? Probably the entry was a little late, but going ahead, what do you see as the key drivers of growth, traditional searches versus Search Plus?
As far as Search Plus is concerned, we are looking at Search Plus more from a user engagement and experience is concerned. We have launched recently the lighter version of our JD app, which is just 1 MB compared to 16 MB. So which is getting launched as part of our advertising campaign, combined with JD Pay, which is a completely interoperable payment mechanism as opposed to the closed wallet payment system. So combined with the JD Pay, the lighter version of the app, combined with the Search Plus, will provide a compelling user experience for both search and transaction on a single platform, on a single app to the Indian consumers, which they have never experienced before. So which is what this ad campaign is going to do, to reiterate the JD platform, reiterate the JD brand, may introduce the the transaction platform on a lighter version of the app to the Indian consumer, so which they will discover the convenience and the ease with which they are able to do transaction on a platform, everything on a single platform, single app. So it is, we believe that there's a tremendous value proposition. As far as monetization is concerned, all these, once you have the traffic and the user engagement, we believe monetization will be a byproduct of the same. As far as Omni is concerned, we have taken a pause. We are reviewing the strategy as far as what segment, what vertical to focus on as far as Omni is concerned. We will have further clarity once we get into Q4.
And as you spoke about Justdial Pay, can you take us through a little more detail? Has the growth and the accretion there increased after demonetization?
Definitely, it is, we are surprised with the way the response that we have got. However, this needs to be popularized. Not many people know that we have a JD payment platform within the app. So, that's what this entire advertising and other campaign that we are launching to make sure they introduce this to the mass Indian consumer. And we believe that the way, the interoperable way in which we have developed this JD Pay is going to be tremendous. It will be immensely popular with the Indian consumers.
All right. And in terms of further growth, what are the kind of cash requirements to feed that from here on? Can you share some numbers with us?
Our business continues, the current business continues to throw up cash, and it will continue to do so as we move forward. We have 950 crore of cash in our bank account. We are quite confident that the organic growth that we are pursuing will be funded internally through internal accruals.
Fair point. We're going to leave it at that, but thank you so much, Mr. Krishnamachari, for joining us and taking us through the contours of the quarter. Let's go through the numbers very quickly. The revenues have been higher by 8% and the bottom line is higher by 6%, although the margins have seen a contraction of almost 500 basis points. Employee costs as a percentage of sales have also gone up, so possibly that's also one factor behind the kind of contraction margins that we've seen. And employee costs in absolute terms are higher by close to 14%. So that's about Justdial. But let's move on to the auto space and focus for what are the key expectations from the union budget this time around. We have with us Ashwin Patil, equity analyst at LKP Securities, to decode that for us. Ashwin, good morning.